Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is March 25th, 2025, and we're diving into Sanara MedTech's latest earnings report for the fourth quarter and full year of 2024. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Sanara MedTech, a leader in medical technology focused on surgical and wound care markets, has just released their financial results, and there's a lot to unpack.
Revenue and profitability overview. Let's start with the top line. Sanara MedTech reported a net revenue of $26.3 million for the fourth quarter, which is a 49% increase year over year. For the full year, revenue was up 33% to $86.7 million. John, what are the key drivers behind this growth?
The significant revenue growth was primarily driven by increased sales in their soft tissue repair products, particularly CellerateRX Surgical and BioSurge. The demand for these products surged, contributing to the impressive top-line performance.
Despite the revenue growth, the company reported a net loss of $1.7 million for the quarter. Can you explain the factors contributing to this loss?
Yes, the net loss was mainly due to increased operating expenses, including higher SG&A and R&D costs. However, it's worth noting that their adjusted EBITDA improved to $0.9 million, indicating better operational efficiency compared to the previous year.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 9 cents for Sanara MedTech, but the company reported an actual EPS of 98 cents. John, what does this slight beat mean for the company?
Beating the EPS forecast, even by a small margin, is a positive sign. It suggests that the company is managing its costs effectively despite the challenges. However, with only one analyst covering the stock, the market's reaction might be muted due to limited coverage.
Operational efficiencies and future outlook. Sanara MedTech's gross margin for the fourth quarter was an impressive 91%. How did they achieve such a high margin, John?
The high gross margin was primarily due to the increased sales of their high-margin soft tissue repair products. This indicates that the company is effectively managing its product mix to enhance profitability.
Looking ahead, what are Sanara's strategic priorities for 2025?
Sanara plans to focus on driving revenue growth and improving profitability in their Sanara Surgical segment. They are also investing significantly in their Tissue Health Plus segment, with an expected investment of $7.5 to $10 million in the first half of 2025. Additionally, they've secured a new credit facility to support these initiatives.
CEO's vision and strategic initiatives. Ron Nixon, Sanara's executive chairman and CEO, has outlined a clear vision for the company. John, can you elaborate on his strategic initiatives?
Certainly. Ron Nixon emphasized the company's commitment to revenue growth and profitability, particularly in the Sanara Surgical segment. They're also preparing for a pilot launch of their Tissue Health Plus program in the second quarter of 2025. Moreover, they're actively seeking financial partners to support their long-term strategy.
Key takeaways. In summary, Sanara MedTech has delivered strong revenue growth and managed to slightly beat EPS expectations. Their strategic focus on expanding their product offerings and investing in new initiatives like Tissue Health Plus positions them well for future growth. John, any final thoughts?
Sanara's performance is commendable, especially their ability to grow revenue significantly. However, the increased net loss highlights the need for careful cost management as they invest in future growth. Investors should keep an eye on their execution in the coming quarters.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Sanara MedTech's performance in the comments below.